ShortMeTina here once again from ShortMeTina.com with my daily recap. Today is Friday, so I want to say TGIF. Hopefully so far you're having a good day. I'm going to obviously kick it off as I usually do with a recap of the overall markets, but before I do that, let me say welcome. So if this is your very first time tuning into a ShortMeTina video, I'd like to say, of course, welcome. Do us a solid thumbs up, hit that subscribe button, and again, comment in the comment section and let me know how you found me. That's the first thing. If you're returning, welcome back. Same thing. Thank you for being here with me. Hit that subscribe button, thumbs up, and comment in the comment section. So we're going to kick it off in same old fashion with the overall markets, despite S&P 500. I'm going to rehash what I said yesterday. So if you listened to that video yesterday, this is old stuff. But if this is your first time tuning in or you didn't hear what I had to say yesterday, this is new stuff. So for the SPY, what did I say? All right, let's look at these 3 hours here. I said the Feds have cut rates. I want to say this week was the third time this year. The first time, which was back, I believe, in late July, after the Fed issued rate cuts, the market experienced consecutive days of declines, shedding about 6%. Hence the arrow here. You can see that downtrend. Then we actually ran up heading into the second Fed meeting. This happened, I believe, around September. We also got cuts. We see that pullback here, another pullback to the tune of about 6%. And then we once again ran up into this most recent Fed cut that I believe occurred on I believe it was Wednesday. And so yesterday we had that first pullback, right? So I said, well, history often rhymes. It does not repeat. And there's this question mark by that third arrow because I said, well, today, we also experience another pullback and essentially follow suit the first 2 times the Fed issued cuts where the market pulled back to the tune of about 3%. Today, we actually bucked that trend, right? And we actually were up on the day, making new all-time highs once again in the SPY, up about 0.94%. You see a quote here of 306.17, a high of 306.19. So in many respects, we had a lot of buying. Well, I wouldn't say a lot, but we had significant buying, and we were once again up on the day, making all-time highs. So the fact that we were up today, that in many respects bucks the 2 trends that we see here in terms of consecutive days of decline following the Fed cut. However, this is Friday. Monday is always a new day. And I did say that if the market does in fact pull back like it did the first 2 times around to the tune of about 6%, that would bring the SPY at around 285, 286, somewhere around here, a little off of that once resistance, now support area of around 293 to 295. So that's what I was paying attention to with the SPY. We roll on. 4th quarter next week. Let's see what the market has in store for us. And for those that participated yesterday, thank you. But comment in the comment section. Let me know what you think the SPY is going to do, or how are you positioned if you are in the SPY. All right. What else? IWM daily chart. All right. So I did that song and dance with the SPY. You can apply it similarly to the IWM, with the exception that we are not at all-time highs. In fact, we're about 5 or so percent, maybe a little under 10% from all-time highs, which clocked in at around 173.23, I believe. But what the IWM is having a difficult time doing is breaking above that 160 level. You can see this black line here, representative of representative of resistance, and that is that 160 mark. You can see we only really spent some time above that in May of 2018 to around October of 2018. So we spent about 4 to 5 months trading above 160, but for the past 2 years, this is the only time in which it has done that. So question mark here, is 160 the next stop? We closed at 158.08 today, going as high as 158.19. So on a decent volume. So we actually closed relatively close to today's high, which signals that perhaps this rally will continue into Monday. That is to be seen. But again, 160 has served as a huge resistance wall for a very long time. So if we get to 160, it would be sort of monumental if we break above. If not, expect it to do what it's done in the past, which is turn down. But we will see. What else? All right, and then we have ticker CRC daily chart dating back to around 2014. But let's just zoom in on price action today. Look at that volume coming in. Huge huge winner on the day. Stock is up about 50%, closed at $8.39, slightly down in after hours. I see a quote of around $8.32. So congrats to anyone that partake in this rally. So you're asking me buy, hold, sell, what have you. So for me, I don't really like, okay, I shouldn't say that because I have traded counter trend, but I think especially if you're new and you're not seeing the level of success that you want, you should keep things extremely simple, or as simple as can be. And so with CRC, for me, keeping things simple would be trading with the trend, right? Trading with the trend would not necessarily mean buying this stock or going long, because again, dating back to 2015, you can see we have remained in a downtrend, which once again is characterized by lower highs, lower highs, lower highs, lower highs. So despite that 50% move on the day, just about a few months back, this stock was trading at around $15 to $20. So sitting here at $8.39, it's lost a lot of ground. So I'm not surprised to see that 50% pop. But with all that said, still has not bucked that overall downtrend that it experienced dating back to 2015. And for those reasons, I probably would not look to take a long position. However, if you are long, or you're looking to get long and you think what I'm saying is nonsense and you still want to go long anyway, what you want to do obviously is pay attention to how the stock opens up heading into Monday, right? And even pre-market to an extent, right? So what that means is that if we open up above 839, that's a good sign. If we take out today's high, what was today's high? Today's high was 845. If we take out today's high of 845, again, these are all good things, okay? All good things. However, if we open up below 839, and you can kind of gauge what the market's going to do by looking at pre-market. Regular, you can gauge what's going to happen in regular session, at least in the open, if you pay attention to pre-market. So if in pre-market this is trading down below 839, not a good sign. More than likely the stock will experience a pullback. And that's my take on CRC. A little bit all over the place, but I think I kind of touched on the salient points. All right, so we're going to wrap it up and cap it there. Tina here, once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. What did you think of my analysis? All right, let me know. 2, I do videos daily. So in short, if you have not hit that subscribe button, make sure you hit that subscribe button and hit that like button and turn on that notification bell so you'll be notified every time I upload a video. All right. And the last thing is if you want to learn more from me, I've been trading for a long time, over 15 years, right? A long time, close to 20. And definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. I'll talk to you